This is Kerry Artek with Artek Advisory, the AgriTalk video supplement for the week of Monday, October 12th. I cover three markets today: December wheat, November soybeans, November feeder cattle. I'm going to show you some charts for each. But first, if you don't mind, I'm going to talk a little bit about the website that you obviously have visited in order to view this video. You clicked on the AgriTalk. If I could ask you to scroll all the way to the bottom of that page and click on the free trial button and fill out this free trial form. It'll give you 2 free weeks, no obligation. You won't get hit over the head repeatedly with sales calls or sales emails. You will be put through an email funnel that will remind you you've got a week left of your free trial, so forth and so on. You'll get all of my analysis for 2 weeks. You will get a phone call from me during which is basically an introductory phone call, during which we can talk the markets, we can talk about your needs. It's essentially a free consultation. If you want to talk market, we can at that time when I reach out to you. So I just ask that you fill out the free trial form and take the 2-week test drive. Let's jump into Monday's analysis. I'm going to start with December wheat. Last week we hit a significant area of resistance. Now this is a weekly continuation chart, volume-based rollover. It goes back over 10 years, actually about 13 years, to 2007. It includes the 2008 high. This formation here I've been talking about for months. We got to 616 3/4 last week. We rallied to within 2 cents of it, and it is a formation. It's a 4-year channel top that is backed up a bit by a nearer term channel top at 626 3/4. So 618 3/4 to 626 3/4. We did essentially test it last week. We rallied to within 1% of a significant long-term resistance area. And so now that we've tested it, the market can rotate south through the rest of the year. Now, I don't have any sell signals per se. I'm just saying that now that we've tested long-term resistance, the market is prone to back off and fall south into later year. Let me give you what those price points would be. Now, once again, I do not have a sell signal down to 536 3/4, but if you're a longer term hedger, if you're playing the market for, let's say, 1 to 3 months or so, then 536 3/4 is a formation that is in reach. I'm going to say between now and the end of November. At this point, 536 3/4 rising weekly, the market can bottom out into December contract expiration. But overall, the significance of this longer term formation that goes back 4 years does allow the market to fall back into the 470s over the next several months, which once again is illustrated here. So if we were to close below 536 3/4, then 470s, this formation is around 470 right now, would become the next 3 to 5 week, 2 to 3 month target. 470, I'm just putting it out there, is now in reach over the next 3 to 5 months, so long as we continue holding below this significant area of resistance. But if we continue pushing forward, pushing northward on the broader wheat market, and if we settle this week Friday above 626 3/4, which would obviously clear also this 618 3/4 formation, then you can actually see this kind of rounding bottom. The question is whether this rounding bottom is going to result in a continuation up into the 890s. If we close above 626 3/4 at the end of this week, I'm going to say yes. 896 even becomes our next objective long term. The question then is, are we going to realize it by, say, the spring of next year, summer of next year? I'm going to say somewhere in there. Certainly by a year from now, this area should be realized. And it could be at a much more aggressive pace. It could be by the spring of 2021 that we reach 896 even. On the way up, I'll just let you mention that 754.5 is a meaningful resistance area that would become, really kind of a 2 to 3 month objective, 754.5, if we closed above 626 3/4 at the end of this week. But until then, just know that longer term selling pressures can now build, and we may have actually placed a longer term high in this market. And I'm going to keep saying that so long as we continue trading now below 618 3/4. Let's move on to soybeans. I've been talking a lot of soybeans on the show a lot lately. And if you've been listening, you know that in late August we had a meaningful longer-term buy signal above this formation that is presently at 943 and 3/4. And at that time, I'd mentioned that 1082 even was a 2 to 3 month target, and 1142 half in reach spring summer of next year. Well, the market has maintained a pretty aggressive upward pace, and what was considered a 2 to 3 month objective at 1082 even has now been realized inside of 2 months. In this area is nothing more than an old series of highs in the weekly chart that go all the way back to 2014. It is one that can stall this rally temporarily. I am ultimately expecting 1142 half as the overall objective following this buy signal above 943 and 3/4, but 1082 even can contain buying into November trade, possibly through the balance of November contract life. And from here, the market could fall back into the 943 and 3/4 to 983 even area. There's no signal for that at this point in time. I'm just, once again, it's not altogether different than what I mentioned in the wheat market just now. Having tested longer term resistance, 1082 even, by the way, last week's high was 1079 and 3/4, so we rallied well inside the 1% threshold on that. The market could fall back now into the 943 and 3/4 to 983 even area, a wide zone of support that I'm going to show you right now. 983 even is basically this former channel top we pushed through in early September. I was expecting the market to violate it on the way up. It has, but it is now considered really a floor of support that is able to contain monthly selling pressures in its own right. So if you're trading the big picture, if you're trading or hedging into later winter, into spring trade, essentially you've got a zone of support that starts at 983 and ends at 943 and 3/4, above which we should reach 1142 half over the coming months. That said, closing above, what do we have here? Bear with me. Boom. 1082 even this week. Now, the truth is, if we close above 1082 even on Monday, and I'm actually recording this on Sunday, October 11th, by the way, so I have no idea what's happening on Monday. But if on the end of day Monday we close above 1082 even, then quite honestly, 1142 half not out of the question by the end of the week, given the heightened volatility. 1142 half able to contain buying well into next year. This is a formation that once tested, the market can rotate south back into the 940s within several months, possibly all the way south into the 820s, 830s within, I'm going to say, spring, summer of 2021. So that's how significant 1142 half. And it is likely to be tested once again over the coming months, and let's just say coming weeks, following a close above 1082 even. Let's talk upside, that in the event that we actually settle above 1142 half, yes, we've got some meaningful Fibonacci's and speed lines on the way up, but I'm just going to throw you the big picture target then. Closing above 1142 half at the end of any week, we should, I'm going to say, by summer next year and quite possibly by spring 2021, 1438 half is our next big picture target. So I'm just going to throw that out there, and if we close above 1142 half at the end of the week, I will keep mentioning the 1430s as our next long-term objective. Let's finish with November feeder cattle. Just a reminder that in late June, the market did post a meaningful buy signal, then anticipating the 155.95 formation. Now, since then, we've consolidated. We fell back, obviously, in August, consolidating in much of September. But we do have a sell signal right now that I'm going to mention. This is near term. This happened a couple of weeks ago when we settled the week below this 141.85 formation. It was lower at that point. It's rising weekly. I've been in sell mode, November feeder cattle now for 2 weeks, and I am expecting the market to continue south to long-term support in what I'm going to say is the low to mid 120s, 122.70 to 124.55. And there we've got a convergence of, a former horizontal channel bottom. We've got an ascending channel bottom. We've got a former descending channel top. all inside of a 2-point range between 122.70 to 124.55. This area is considered a 2 to 3, 3 to 5 week downside objective that should be realized by the end of November. And by the way, this lower area can absorb selling through winter into next spring. If we test it, the market can stabilize and rotate higher into spring, summer of next year. Once we test this area, I'm going to once again be talking about this 155.95 formation as one that is attainable into spring, summer of next year. But for right now, near term, when I say near term, I'm talking 3 to 5 weeks. Near term bearish below 141.85, expecting the low to mid 120s over that time horizon. Now, if we, and this is the last thing I'll say about this, if we rally this week and close Friday above the 141.85 formation, that neutralizes bearish tempo. And with that, the market can stabilize and grind its way higher over the following 3 to 5 weeks to this 155.95 channel top, this longer term objective that's played out since late June. This area, 155.95, able to absorb buying well into 2021. And that is all that needs to be said for this week's AgriTalk video supplement. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.